So what we're going to talk about in today's video is what happened to push up rates today, and are we ever going to get back to 5%? What you have to do is you have to start looking at the agenda or the economic calendar to figure all this stuff out. Why? Because mortgage rates, they're tied to a bond in the bond market. So normally when you have good news in the markets, that'll push up stocks, and that's not so good for bonds, which are controlled, or they control mortgage rates. So let's get over to the news we had today and kind of put all this together for you so you can understand what news we need to get in the future to start bringing down mortgage rates. So the news we got today was the last piece of the puzzle that we were waiting for to fill in the gaps of what the Federal Reserve looks at when they're looking at the economy to see what they're going to do with the rate that they control, which is the federal funds rate. But we go over to this and we want to see what is the jobs market doing right now, because in today's world, we got a lot of this information that just came in, such as the Federal Reserve monitors inflation, and they monitor by looking at the PCE. Well, this number just came in, I think it was last week or the week before, and almost every month so far this year, it has been dropping. And this is the number that they want to get it to 2%. Well, we're at 2.1, a far cry from where we were back in, 2022? It's 7.2. So it's come down quite a bit. Well, then we got the unemployment rate in today. It's staying sticky at 4.2. That's great news. So then we're going to also focus on where GDP is taking us. And I'm going to show you a little caption on that in a second, which is taking us in a good direction on gross domestic productions. So if you're starting to see a lot of these starting to stabilize, you can say, okay, this is good news, but we still have those tariffs behind us. But let's take that out of the equation right now. Let's get back to the general markets on how to understand these things. So the one piece of the equation that we got today was the jobs market and the unemployment rate. Well, it didn't move. It stayed steady. A lot of people thought it was going to uptick. So here's, if you look at the mainstream media, here's what you're going to get, and this has caused confusion. U.S. added 139 jobs in May as the labor market steadily cools. Job report shows some worrying signs, but then if you go to Fox Business, U.S. jobs report was way better than anyone anticipated. So what is it? Well, if you look at the jobs report, the economic calendar, here's what we really want to focus in on. I think it just rebooted on me, so let's refocus this in. Let's see if it comes back. If it doesn't, I'll just show you how to work this. I go to Bloomberg.com, and I want to see their economic calendar. Okay, so it did, let's see. We're going to go to the top. I got to readjust this, so let's do this, and I'm going to show you how to do this so you can do it on your own. So go to the economic calendar, scroll down. All we want to know is the news in the U.S. because that has the most relevance. We're going to select all those, and today we're going to select two of these. Well, yeah, let's click two of these. The more you click, the more data you're going to get, and this is the importance level. So let's just click one, because it's going to be, I want you guys to understand a lot today, so I got more pieces of this video to get to. So here's the data that we got today.